You try to pay for coffee, but your card declines, leaving you panicked that your money is completely gone. If your Australian bank account suddenly stops working, first find out whether the bank blocked your card, one transfer, online access, or the entire account. A restricted account rarely means your money has vanished or that you are suddenly a criminal suspect. This decision tree shows what is actually happening. Banks pause access to comply with strict domestic regulations, so your first job is to diagnose exactly what is broken. If you assume your entire account is closed when only a single international transfer is pending, you will end up giving the wrong information to the bank. You need to approach the bank with specific diagnostic questions. Asking for a case number or finding out exactly which department is handling the block is the only way to find the correct path to resolution. Trading that initial panic for a methodical approach stops you from wasting time and prevents a simple compliance check from escalating into a permanent closure. Let's start with check 1. You must confirm if you can still deposit or withdraw money in a physical branch, or if only your online banking is affected. That brings us to check 2, which involves Know Your Customer or KYC obligations. Banks are required to periodically update your basic residential, visa, or tax information. Consider a scenario where a customer ignores repeated digital requests for updated identification simply because they can still see their balance. The result is a hard lock on online transfers until that verification is finally completed through an official channel. You should never upload your identity documents through a link in an unexpected text message due to the high risk of phishing. You must always use the bank's verified app. Providing updated identification clears these routine holds instantly. The trade-off for ignoring mundane administrative requests is a complete suspension of your financial access. For check 3, we look at the money trail. Transactions that fall outside your known profile, like a sudden large deposit, trigger mandatory source of funds reviews. Take the example of transferring a large sum from your own overseas account for a home deposit in Australia. That will likely trigger a pause and a request for documentation. This illustrates a legitimate financial trail. A review doesn't mean the bank suspects a crime. You must prove how those savings accumulated. A simple balance screenshot is insufficient. The bank requires a continuous document trail, such as payslips or property settlement documents. Do not try to split a large transfer into smaller amounts to avoid the bank's scrutiny. This is known as structuring, and it creates immediate regulatory red flags. Submitting false invoices or altered gift letters transforms a standard compliance review into an unlawful activity. You must trade your expectation of financial privacy for total transparency. Proving the legitimate origin of your funds is the only way to satisfy institutional due diligence. Check 4 addresses scams and fraud. Banks will proactively restrict an account to prevent further loss if they suspect a customer is manipulated by a scammer or acting as a money mule. This happens frequently with fake online jobs, where a person receives unknown funds and is told to buy cryptocurrency with the proceeds. The required action here is immediate. You must stop transferring funds, preserve all communication records, and ask the bank to secure the account. That brings us to check 5, and the legal concept of tipping off. Australian anti-money laundering laws strictly govern what bank staff are allowed to tell you. Bank tellers and frontline support cannot legally answer questions about whether a suspicious matter report has been filed against you. You must accept the trade-off of operating with incomplete information. Pressuring frontline staff is futile, so focus on providing the specific documents the bank asks for. Under Check 6, we have to recognize that closing an account entirely is a separate action from a temporary investigative hold. Banks have the commercial right to end relationships. A customer might receive a formal closure notice in the mail without specific accusations of wrongdoing. Your immediate steps upon receiving a notice should be to download all your statements, redirect your upcoming salary payments, and establish a new account. Check 7 covers a highly uncommon scenario. Accounts can be frozen due to targeted financial sanctions or matching names on government lists. If a bank specifically cites a legal sanctions list, like DFAT, you should seek external legal advice rather than attempting to bypass the restriction. While you cannot force a commercial bank to retain you, methodically following their exit or review process guarantees you retain legal access to your legitimate funds. This checklist outlines your action plan. Regaining access to blocked money requires patience and administrative transparency. Initiate contact only through official channels and provide exactly the truthful supporting documents requested, nothing more and nothing less. Secure the account if you spot unauthorized activity and meticulously record every case number the bank provides. If the process breaks down, make a written internal complaint, explicitly using the word complaint, and escalate to AFCA if eligible. If the block prevents you from purchasing food, medicine, or housing, explicitly declare urgent financial hardship to request temporary, limited access to verified funds. The regulatory and procedural information presented in this evaluation was verified current as of July 24, 2026. Banking compliance is an unyielding machine, not a personal attack. Please note that this is administrative information, not personal financial, legal, or migration advice.